And it was really easy at one point. I mean, really, it was pawnbroking. You know, especially the security had the money. And it's getting back to looking at that serviceability that much more, but there's still a gap where, with the exception of the odd niche operation banks such as Handelsbanken, who've got lots of branches opened, that most of the bankers do not look at the management team, and ultimately it's the management team that will deliver that financial performance to drive the serviceability.
It's them that's in the sling to the deliverable end, basically.
And I think when it comes to borrowing money, the bit that I'm focused on is demonstrating categorically, in detail, how the management team are capable of implementing the business plan to deliver on the forecasted financials.
I remember reading or hearing an article of Alan Sugar was at some business meeting, and someone had asked him about banks, saying, well, banks aren't lending any money, and I completely agree with what he said. He said, well, if they're not going to get it back, they're not going to lend it.
Absolutely.
You wouldn't give a mate of yours money who's never got any. He's up to his neck in debt. You might give it to him as a gift, but banks aren't in the gift industry. They're in the getting a return on their investment. A lot of people, £375 billion worth of quantitative easing's gone into the economy. I don't think banks wisely and rightly so have used a fair proportion of that to prop up balance sheets and stuff. Because they need to make sure their business is cash rich and solvent, and that they can be safe enough to borrow money at favourable rates and stuff in the world economy. That all makes perfect sense, but not a lot of it seems to be reaching further down the chain. Do you agree with that? Disagree?
Well, I do agree with that, yeah, but I think there's a few reasons as to why that is. I think one is there's inevitably a number of businesses that are asking for money who it is the wrong thing to lend them any further money. Yeah. Because actually, that isn't going to solve their problems. It's a short-term fix, and chances are the lender will lose it. Yeah. So you're right with exactly what you said and what Alan Sugar said. You wouldn't lend someone some money if you knew categorically you're not going to get it back. There's then businesses where there isn't really an effort made to clearly understand the business and that management team, and that's
the sort of thing where you would come in.
Yeah, potentially. That's right. Yeah, and that's a more worrying one for me. And sometimes the business doesn't know how to ask for the money right, or the information given doesn't portray the right picture, and it makes it too easy for a bank to say this isn't a viable business long term. Because how do you define viable, which is the word the government use? So it's easy for the bank to say no. Okay. So there is what I think is a genuine issue with the banks not lending where actually the business deserves it, but arguably there's also an issue with the business and how they're asking for it. I've also seen a lot of scenarios where the businesses don't want to ask for the money, and they're either worried that it will give the wrong impression that they're asking for money, or it's a case that they're assuming they won't get it because we all keep hearing the banks aren't lending. So a lot of people make the assumption there's no point in asking the bank because they're not going to lend anything. Okay,
here's a thought. I mean, I don't know if you know the answer to this. I mean, I certainly don't. If you're a business owner here, sitting here now, watching this, thinking, well, I've got a good business. It's got a bit of equity. I want to do a bit of expansion, or possibly buy another business. Mergers and acquisitions seem to be quite a reasonable thing at this time. When there's a depressed economy, those with money look to take advantage and buy up some of the struggling competitors. Again, it makes good business sense to do so. But if you're sitting there looking at your balance sheet thinking, it's okay, a bit of cash injection would enable us to go and get a share, buy another company, innovate something in, or branch out into a new area that we've been looking at doing. Do you think essentially that when you go for finance as an individual, we hear this thing about too many credit checks against your business will show favourably in your personal credit reference? Is it the same for companies?
No, because to be honest, I mean, it depends to some extent on the size of the company again. Yeah. But in most cases, and certainly in the sort of slightly larger arena, 3 million upwards probably. Okay. Possibly 1 million upwards, to be fair. The credit assessment is undertaken by your manager, your relationship director initially. Yeah. So they're your first point of sanction, if you like. If they don't want to do it, you're not going to get anywhere. So that's why you need to have the right person with the right relationship. Then it's going to go up to a credit team. Yep. It doesn't go on a credit scoring system. It's not that they'll look at Dun & Bradstreet and see how your business looks. They'll assess it to make sure there's no really bad credit there, CCJs, that sort of thing. But actually, that's as far as that goes. In general, what they're going to look at is they're going to look at your historic performance. Yeah. and they might take a lot of, it depends on which way the wind is blowing as to how much credence they give that.
Yeah.
They'll look at where you are, and obviously they'll look at where you're going, and that in theory they'll look at the management team's ability to do it, and it's an analysis done by that manager, presented to the credit team, who will then either ratify that and say yes, we agree, or not, as the case may be.
So there's no potential risk to business owners sort of thinking, there's no harm in making that inquiry.
Not at all.
Obviously, a lot of it's down to how you pitch it, and
absolutely,
whether it falls on deaf ears or whether or not they think it's viable and they're likely to get return.
And actually, if you've got a good relationship with the bank manager, you should be able to chat it through and discuss it before it gets to a point of actually putting up a full credit request to the credit team anyway. They will have a good idea of what the appetite is, whether they admit it or not. Pretty much all of the banks have a credit policy for each sector of business, and that manager will know what that credit policy is, and they'll know, for instance, there's some of the banks out there who just will not lend to property related investments or developments of any kind. It's just a categorical no.
I suppose that they've got to spread their risks in terms of the portfolio where they're lending. If you lend purely to, I don't know, the IT sector, and then there's the .com boom happens, your bank's in jeopardy, let alone all your client base sort of thing.
Yeah, and that's what caught some of the banks out. They had a much greater exposure to one sector than they arguably should have done.
With sort of going back to the small business sort of side of things, essentially, if you've got you're looking at starting a business, we keep hearing in the media it's a really good time to do it. Lots of people made redundancy money, invest in a business, go and do what they did previously, or life-changing experience and that. What should a new business owner, someone starting up, expect from their bank?
Well, the first thing is you need to find a manager at the bank that you get on really well with.
Yeah.
And arguably it shouldn't matter which of the banks you go to. They should all be good at this.
Yeah.
So you find someone you get on with, hopefully they'll then introduce you into a nice local accountant who you can get on with.
Yeah.
And you'd hope that you would get a nice support pack, which most of the banks produce, and a bit of guidance around your PAY if it's required, everything else of that nature. At the moment, the challenge with that is that a lot of the startup business managers do have these portfolios of 800 odd customers in. So they do have very limited scope to spend that much time with people. And unfortunately, there's a strong element that a lot of these people will get very sceptical because they see so many things. And there's often people come in, they've got a fantastic idea, they've seen a niche in the marketplace which they're going to go for, without realising that actually lots of other people have gone for that, and there's no one doing it for a good reason. You can't make money from it.
Of course,
so you have to overcome that, and that's why it's important to find someone you get on with, and then you'll get something back.
Yeah, okay. When we talked off air earlier, I mean, something that came out of it, we were talking about why it is perceived that certain banks don't lend money and that there's not enough loans being written and they're falling short on government lending quotas and stuff like that. Something that you sort of said that struck a bit of a chord with me. I mean, at the end of the day, it's wrong of anyone out there to expect a bank not to make money. They're a business. They've got to make money. So if you've got a pot of, I don't know, for ease of, hypothetically speaking, 50 grand to lend to, the care industry, the care home industry sort of thing, and you're sitting there, you've got a couple of applications in for people, and you'll think, well, I've got a set amount of money, I can't meet everyone's criteria. You're obviously going to lend that money to who's going to give you the best return.
That's right.
It's literally quite often that simple. I know people I've been talking to have been saying, banks wanting ridiculous interest rates and stuff like that, and that's why people haven't at times taken up some of the funding. But a bank's got to look at balancing its risk and get a return on it. Yeah,
that's right. And you will find all of the banks now are looking at what's called their risk-weighted assets. They're looking at what money they've lent out, what risk is there, and it costs them more, and they have to put aside cash for the riskier the lend that they've done. So if it's £100,000 lend and it's a real chance of default, they've got to set aside £100,000 to cover the loss. So effectively, they're putting out £200,000 instead of 100.
Yeah.
The low risk though, they might only have to put 5,000, well actually 12,000 or thereabouts aside. So it genuinely does cost them more money, the riskier the scenario that's there, and they do need to make money. The bit that I do have a bit more of a challenge with around this is that you're right, it's important for the bank to make money. And if there's two different scenarios out there with the same level of risk, but they can make a bit more money out of this one than that one, then I'm seeing increasingly they'll go for the one where they can make more money. Where I have a bit of an issue is that the other customer might have been with them for 100 years and that one for 6 months.
Yeah.
And that's where the loyalty factor in some cases is gone out of the window, unfortunately, which is why it's even more important to find a banker that you're getting on really well with, to have that relationship to avoid that sort of scenario.
I think that's very important. I mean, when you, as a business owner, when you've got an accountant, you need an accountant that understands what it is your business does.
Yeah.
If you've got, if you need to involve any legal representation, you need someone that really understands what the issue is. I mean, you don't go, for argument's sake, if you've got a matrimonial legal problem, you don't go and get a property conveyancing lawyer to represent you.
Yeah.
You go and get someone that deals with that, and it's the expertise that people pay for. I mean, I suppose really just chucking a curveball in there, in terms of your own experience, what would you say is some key advice to give to people, aside from the obvious of get a bank manager that that understands and stuff like that? I mean, are there any sort of real gold nuggets of information that you've seen from sitting on the other side of the fence?
I think there's a few key things. Firstly, have a business plan, but make it one you're going to use. Because the amount of times that I saw a business plan and someone would pick it up at the top of the drawer of the desk, it's pristine, it's lovely, it looks wonderful, really thick, but it's quite clearly never been opened since the day it was written. So have a clear vision, have a plan to make it, so, to enable you to reach that vision with all of the things you need to do, have goals along the way you need to achieve, and make sure that you've got the ability and experience, both yourself and within your business, to implement it. If you haven't got those 4 things, you're not going to get anywhere to start with. The second thing is having good advisors. And I'm a great believer in getting people in that are better than you at everything possible. Yeah. And that includes accounts and the legal side, you're right. The accountants now, what I would say is, if you are looking to borrow money, you do need to probably look at a larger firm than you might have done before.
Okay.
The banks, when they're assessing a credit risk, if you're with someone who's a one-man band, who might be very capable, but actually that's not really what they want. They want to see that you're with a firm which has probably got more than 2 or 3 offices across a region, area, whatever.
And there's plenty around here like that, Scrutton's, PKF, people like that.
In Swords, that's
right,
yeah.
In Swords as well, yeah.
And they've got people who are tax experts, both personally, commercially. They've got commercial finance people. They've got people that will understand the general sort of accounting that you need to do for your end of year financial, everything, and importantly forecasting. If you're just with Joe Bloggs up the road, then there's going to be an element of like, well, we don't know this guy from Adam. Can we rely on his figures?
Well, there's always good regional firms. I mean, Andrew Dyer, that I've had on here from Beaton, sort of thing, is another example.
Absolutely.
And I think, again, it's all about confidence, isn't it? The whole economy, really, it's a bit fictitious. The whole economy is built on confidence.
Yeah.
Lending rates and all sorts of stuff like that, consumer confidence. That the whole thing seems to be, almost kind of like a Hollywood. It's all about the appearance rather than, it needs foundation.
Yeah.
But if confidence is high, bankers tend to lend a bit more. And I think with people like yourselves, a good accountant, if needs be, a good, good legal representation and stuff like that. That's all stuff that's going to give confidence to a bank, and
it's removing reasons to say no.
Yeah, it is, but essentially it's a basic sales ploy. You need to understand what your end goal is and be able to present yourself as trustworthy, creditworthy and all, low risk,
be aware of what objections there might be,
and cover up with them beforehand. And I think that's something a lot of people. I don't know why. Still, a lot of people in business aren't business people. And that's why people like that need to rely on services such as yourselves, the accountants, legal representation and stuff like that, because I don't do my own accounts. I ain't got the first clue what I'm doing with my accounts. I tried doing a VAT return once and realised I did it for the wrong 3 months. So I said, right, that's it, I'm never doing it again. But I think it's by outsourcing time-consuming but important jobs like that, you can get on with doing the bits of the job that you're good at, and and then ultimately that adds to success of a business sort of thing. I think there's
few people that can do everything themselves.
Yeah, I agree. And I'd sort of like to say thank you very much for coming on board. It's been great to have you here, and it's been good to get your insight from the other side of the fence, and also what you think of the economy as well. So thank you very much for coming in.
Pleasure. Thanks, Craig.
Thank you.